In today's market wrap, I want to show you what's going on and the reason why I decided to take profits on my metal positions. So uh, we've got a market here that's trying to top. Um, you can you can see that the price has broken the intermediate trend line. That's a sign that the intermediate cycle is trying to decline. But if I've said this once, I've said it 1,000 times. You cannot short the stock market. It's a rigged market. The central banks have a printing press. Uh, they can prop these markets up. So you cannot short the stock market. And today is a classic example. I was concerned that we might not return to free markets with the Trump administration. When this half intermediate cycle low only lasted 2 days, that was a big warning flag. The market then continued to churn sideways, broke the intermediate trend line, a sign that the intermediate cycle was uh, trying to roll over. But then today, we've got a huge intervention that pushed the stock market up to new highs. So they have probably negated this trend line break. Uh, and now, if you can see here that as long as the stock market was churning, going sideways, trying to top, there's not a lot of incentive for traders to invest. They can't make any money. So money went looking elsewhere for something that's moving. And of course, what was moving was gold, and miners were coming out of their yearly cycle low. But with this intervention today, that may have possibly aborted the move down into what should be a yearly cycle low, and it would be due in late February or early March. This move right here today may have aborted that or at least prolonged it, maybe even forcing another daily cycle after this one. So the yearly cycle low, instead of occurring when it should naturally occur at the end of February or maybe the first part of March, could get pushed out another couple of months into maybe even to May. And so if we can get a breakout here and start moving higher, then we're right back to this same scenario like we were here. There's just not a lot of incentive for traders to invest anywhere other than the stock market. The stock market's protected. You don't have to worry about downside risk, and as long as the market is moving up, we're getting some movement, then traders can make money there. And if that's the case, then there just may not be a big incentive to put any money in the metals market. So that's why I decided to take positions here. This intervention today is a wild card that I don't know how to account for. This could, if it gets some momentum and we get a breakout and we start to run, this could, in theory, stretch the yearly cycle low out another 2 or 3 months, maybe 4 months. And I think we need the move down into the yearly cycle low to really get a big move in the gold market. So we had some nice gains on our positions. This move today, this intervention, that looks like it's probably aborted the natural move down at the yearly cycle low, is a wild card I don't know how to account for. So while I see how this plays out, I'm going to be content to just sit on the gains I've got right now and wait and see how this plays out.